the Trump tariffs. But we wanted to know what everyday citizens think. We came to the shopping center in Beijing and asked people to weigh in.
General Motors just got slammed with a $5 billion crisis, and it's not some distant corporate problem either. It's happening right here, right now. Thanks to rising US tariffs on Chinese imports, the cost of building cars has skyrocketed. And now GM is bleeding money, shutting down factories, and putting thousands of American jobs on the chopping block. The company has already stopped exporting cars to China, and it's even thinking about moving production out of the country entirely. This isn't just a financial setback, it's a turning point. The real question is, if GM, one of America's biggest automakers, is struggling to survive this trade war, who's next?
New export orders in April fell to their lowest level since 2022. That was when COVID was ravaging the country. Overall, manufacturing activity in China was the weakest in more than a year.
The US government recently imposed steep tariff imports on a wide range of Chinese goods, and GM is feeling the pressure in a big way. You might think a huge company like GM can absorb a few extra costs here and there, but in this case, we're talking about a potential $5 billion hit. That's not pocket change. That's the kind of loss that shakes up an entire business strategy. These tariffs have driven up the cost of many of the parts GM relies on to build its vehicles. From essential components like electronics to metal parts and wiring systems, a good chunk of these materials either come directly from China or are part of a China-dependent supply chain. With the new tariffs in place, every vehicle GM makes in the US just becomes significantly more expensive to produce. This increase in manufacturing costs isn't just a headache for the company, it has a ripple effect. First, it eats into profits. GM says the projected financial damage could be as high as $5 billion if the tariffs stick around. That's money that could have gone into research and development for electric vehicles, expanding US jobs, improving facilities, or even just keeping their cars affordable for customers. But now, GM has to figure out how to cover up that gap. And let's be honest here, when production costs rise, those costs usually get passed on to the buyer, which means consumers like you and I could soon see higher sticker prices at the dealership.
Was China Beige Book COO Shahzad Kazi. Shahzad, let's talk about these numbers, what you're seeing, because you guys are really doing this on a moment-by-moment basis. We're looking at the month of April, and April started off pretty strong. It's not what you saw at the end of the month.
And to make matters worse, the trade war also has forced GM to make a tough call, stopping exports of US-made vehicles to China. For years, China has been a major market for GM, with American-made cars being shipped across the Pacific to eager buyers. But now, with trade relations deteriorating and tariffs coming from both sides, it just doesn't make business sense anymore. So GM pulled the plug on those exports. Losing such a massive overseas customer base is a big blow, not just in terms of revenue, but also for GM's global presence and long-term growth strategy. Put it all together, and what you've got is a perfect storm: skyrocketing costs, shrinking markets, and a lot of uncertainty. And this is just one part of the larger crisis the company is facing. General Motors, an iconic American brand that's been around for more than a century, is now facing one of its toughest challenges yet. Thanks to the ongoing trade war and the weight of massive US tariffs on Chinese goods, GM is being backed right into a corner. And now, the company is doing what many had feared, seriously considering moving production overseas. At first glance, this might sound like a typical corporate strategy move, but dig a little deeper and it becomes clear. This isn't just a business decision, it's survival mode. With tariffs driving up the cost of parts and production, GM is struggling to keep its US-based manufacturing operations profitable. Many of the companies used in modern vehicles, electronics, batteries, wiring systems, are either imported from China or rely heavily on Chinese suppliers.
一些政策比较好，如果是对双方国家可能产生了一些不好的一些利益的一些东西的话，我觉得还是不太好。
Now that those parts come with a tariff price tag, the cost to build each car has shot up dramatically. Staying competitive in such a tight global market is no longer feasible under these conditions. So, what's GM's next move? They're exploring the possibility of relocating their manufacturing to other countries where production costs are lower and where they can bypass US tariffs entirely. In plain terms, that means jobs that are currently here in America could soon be headed overseas.
States. And the second largest foreign holder of US debt.
So China is actually a bigger financial power than it looks like on the surface.
And here's the heartbreaking part. That shift isn't just a future possibility, it's already happening. GM has already announced factory closures across multiple US states. We're not talking about a few small layovers. These are full-blown shutdowns of long-running manufacturing plants, many of which have been lifelines for communities around them. From Michigan to Ohio, thousands of hardworking employees are suddenly being told that their jobs they may have held for 10, 20, or even 30 years, are gone. It's not just employees who are affected. Entire towns are built around these factories. Local diners, repair shops, schools, and small businesses all rely on the steady income and traffic that GM workers bring in. When a factory shuts down, it's not just a loss for the company, it's a loss for the entire local community. Property values drop, small businesses close their doors, families are forced to relocate or face long-term unemployment. One of the most devastating aspects of the situation is how sudden and widespread it is. For many GM workers, there was no gradual decline, just a corporate announcement, a timeline, and then the slow dismantling of something that had been a stable part of their lives for decades. And it's not just blue-collar workers being affected. Engineers, designers, administrative staff, they're all caught in the same wave of uncertainty. The ripple effect is massive, reaching suppliers, logistics providers, dealerships, and beyond. GM has said it's making these moves to align production with market demands and to remain globally competitive. But to many on the ground, it just feels like a slow exit from America. What was once the heart of the US automotive industry is now slowly being hollowed out by global economic pressures. So yeah, this is a story about trade and tariffs, but it's also a story about real people, about families wondering how they'll pay their bills next month, about towns trying to stay alive after losing their biggest employer, about the ever-widening gap between political policy and the everyday worker's reality.
In January 2025, the average US tariff rate on Chinese exports was about 20%. By the end of April, this rate shot up to about 124%.
What's happening to General Motors right now isn't just GM's problem, it's a loud warning shot for the entire US auto industry. GM may be the first major automaker to openly sound the alarm, but if things keep going the way that they are, they definitely won't be the last. This is about more than one company's financial crisis. It's about a ripple effect that could shake the foundations of America's entire car manufacturing landscape. When a giant like GM struggles, smaller companies in the same space start to panic. If GM, with all of its resources, global reach, and decades of experience, is losing billions because of tariffs, imagine what that means for smaller automakers or suppliers who don't have the same cushion. It creates an environment of uncertainty, and in business, uncertainty is poison. One of the biggest concerns is that more companies might follow GM's lead. If GM decides to move production overseas to cut costs and dodge tariffs, who's to say Ford, Chrysler, or even Tesla won't start exploring the same options? Once one domino falls, the rest tend to follow. And that could lead to fewer factories in the US, thousands more jobs lost, and entire communities thrown into economic chaos. This also affects suppliers and contractors, the thousands of small and mid-sized companies that supply parts, tools, logistics, and services to these big automakers. If production slows down or shifts abroad, these companies lose contracts, revenue, and workers. The whole supply chain begins to fracture. But the impact doesn't stop at the factory floor. If production costs keep climbing, automakers are going to have to make tough decisions. Fewer new models, trimmed down features, maybe even cutting back on innovation. For consumers, that means fewer choices, higher prices, and possibly even lower quality options in the near future. So yeah, even if you're not working in the auto industry, you'll still feel the effects, especially when it's time to buy your next car. Then there's the global competition angle. While American automakers are caught up in this trade war drama, automakers in Europe, Japan, South Korea, and even China are seizing the moment. With lower costs and smoother trade policies, foreign car companies are in a stronger position to expand their market share, even in the US itself. If this trend continues, American brands might start to lose ground on their own turf, simply because they couldn't stay competitive under all this pressure. And let's not forget the long-term vision. Electronic vehicles, automation, smart technology, all of that requires massive investment. But how can US automakers invest in the future when they're bleeding money in the present? The trade war isn't just costing dollars today, it's delaying progress for tomorrow. Right now, everything hinges on one thing: tariffs. Will the US government walk them back? Will some kind of agreement be made with China? Or will the current policies stay in place, forcing more American companies to make difficult choices? Nobody knows for sure. GM has already made it clear, if things don't change, there will be more factory closures, more layoffs, and possibly even more production moved overseas. Other companies are quietly watching and likely preparing their own backup plans. The longer this trade war drags on, the harder it becomes for automakers to stay profitable while keeping their operations in the US. So what are your thoughts on this? Let us know in the comments below.